Hello, everybody. This is Noah and John, and we are both from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at Manhattan supply. It is bumping up 65.27. Show me that chart.
It is up, Noah. So that's almost 6% higher than it was last week. And I mean, we're in the middle of a listing wave. So not a big surprise there.
Not a big surprise there. How high do we go? We will see. Let's not forget that we reached 9,600 in terms of supply when we're at the peak. I think that was around October of last year, steadily declining since then. So a little inventory is actually not a bad thing. Let's move over to pending sales, our measure of demand. Usually this doesn't start kicking up until later as fall gets going. It's at 46.14 now. Johnny, show me that chart.
Yeah, you're exactly right. So we're drifting down. We've been drifting down really since July, I suppose. And September, as we've said before, is pretty much the slowest month. So not a big surprise to see us down another couple percent. I do think that's going to start turning around, as you said, early October.
Yeah, it's going to regress towards its mean a little bit. And, we got to get a lot of deals going to contract every week after week, month after month to maintain this high level of pending sales there, Johnny. I mean, we are off the charts in terms of pending sales. We're down from the summer frenzy, of course. We could all feel it and we see it. And when I say see it, I mean, we're looking at the market pulse right here at 0.71. That is your leverage barometer of the market. And when I say that we have cooled from the summer high, you can literally see it right over there. Okay. This is something we spoke about with our professional agents that listen to us and the market updates that we do. We called this the brief buyer window. The brief buyer window that's going to open up at the end of September for a couple of weeks. That is the window between when all the stuff comes on, John, and right before all the stuff starts to get signed. You're in it right now. I don't know how far this goes, but if we get into the 60s on this market pulse, which looks like it's on the way down there, that might represent a decent opportunity for buyers to step up.
Yeah, no, you're exactly right. And as we're going to see the listings, I mean, on the weekly stuff, we're starting to see listings come in on a weekly basis a little bit more than contract signs come in, which is a nice change. So if you're a buyer out there, this is kind of your window of opportunity. You're exactly right.
Exactly. This is what you were looking for. And let's go take a look at those weeklies. We are at the UrbanDigs dashboard. I'm looking at the market ticker. I'm looking at supply. There's 551 things that came on the market. Is it good? Is it bad? Johnny, show me that chart.
Well, it's a number. 551 is a number. I don't know if that's good or bad. I suppose if you're shopping out there for apartments, that's a good number. It's down a couple percent from the week before, 1.6 if you're scoring at home. But still, it's a nice influx of supply.
Yeah, I guess, at this pace, we're going to bring on around 2,200 listings. So we'll see whether or not that holds true or not. Time will tell. John, let's move over to demand contract signed. I see that's bumping up 5% to 222. It came down, but not really nearly as down as what the average is. We're still so elevated above the average, but we are down from the highs. Johnny, show me that chart.
Yeah, so 222 contracts a week in September is a pretty good number. I mean, typically September is a little bit lower than that. We're in the mid hundreds or so. So we're still doing better than normal Septembers, but it's just, when you compare the peak of April, May, it's just we're off that peak, but still a very, very transactional market right now.
Yeah, April, May was a little cray-cray. I mean, it is what it is. And we came down to earth a little bit. And you know what? We're still just very active. So let's just leave it at that. And this is what's supposed to happen this time of year. So there's nothing abnormal going on right now. And again, October, November, that's when that bump up in deals starts. So you're right in the precipice of that happening. And we'll report on it as it goes. But in the meantime, Johnny, you whipped up a whole bunch of rental charts. This is going to be the Manhattan rental update kind of tidbit of this session. So we're going to go through all the different types of things that the rental market has to offer. Let's first start with supply, right? So what you're looking at is the fresh listings coming on. Where are we now? And I added a red 3-month average so you can see the general trend. And John, I don't know what you see here, but it looks like supply is down in the rental world.
It is down. I mean, we had a huge listing wave post lockdown, late summer into the winter last year, and that has sort of subsided. And I think that's, from a landlord's perspective, they're putting out less, but it's being absorbed faster. So spoiler alert, it's a tough time to be a renter right now compared to, say, a year ago when it was a great time to be a renter.
All right, well, let's take a look at those other charts and let's see what the other metrics are showing. Here now we're taking a look at listings that are coming off the market, right? So we're kind of measuring what the removal of the listings inventory is. And this, I mean, I don't know what points out to you. It looks like this chart is giving me a bad finger, John. It looks like it's saying something evil to me right here. The middle finger sticking out right at me, John. Look at that. And look at where we are now. So it's clear that the landlords are actually liking what they're seeing, because otherwise they would have taken their stuff off the market.
Yeah, they really raised the deal flag there, hot and heavy back in last summer. And you know, when you see off market elevated like that, that's a good idea that they're trying to get inventory under control, which is a great sign for you as a renter that hey, maybe I can grab some concessions or some freebies of some kind. But as you see that red line and those bars declining, that's a great indication that supply is being absorbed at a pace where the landlords don't necessarily have to remove listings from the market.
Yeah, and it looks like it's going more back towards just historical average. Sorry, I can't get that word out. Historical average, and that's kind of what you want at the end of the day. So this is going towards that trend. Now let's take a look at leases signed, the activity of leases signed, right? So supply is kind of going down. The stuff taken off the market's kind of going down. And here is the stuff getting leases signed, the activity of that. And we're going down, but we're just not that off of the looks like June highs. It looks like June was that lease activity peak for the rental market. And we're just off that, Johnny.
Yeah, I mean, look, let's just throw 2020 out the window right now, because it was really just a crazy year. But and if you look at the shape of 2019, it kind of goes up and then it comes down. And that's what we've seen for the last who knows how long. What we saw in 21 is we saw a quick ramp up from between February and March up to our highs, and we've just kind of stayed right around peak levels. So even through late spring into summer, we're sort of doing the rental market is very strong. And that's why one of the reasons why, if you're a renter right now, it's becoming very hard to find places and grab any kind of deal. So it's a very tight rental market right now.
Well, I think the next chart's going to show you that. All right, this is the net. This is the net on versus off market. So we're taking into account all the stuff coming on, then the stuff going off, and then the stuff being signed into leases. And you get an idea of which direction the general inventory is headed, right? I mean, you could see the crisis right over here. You could see the quick recovery right over here. And then for the last X amount of months, we've just been recovering. You could just see it going on right over there. And we're still well into strength signal zone. Like this is anything down here below, and this level down here is a stronger recovering market, and anything kind of up here is kind of a weakening rental market. So you could see that this market is still in recovery mode, Johnny.
Yeah, you're exactly right. And listen, we're heading into the winter, which is typically a softer rental market. So this could sort of weaken a little bit heading into there, but right now all signs point to a very strong rental market.
Yeah, it's good to take all these metrics into account and see which way, how does 1 + 1 + 1 equal? You know, this is kind of what that's doing. And then finally, guys, let's look at those rental rates. Let's see kind of where we are. This is what it looks like. We all know that we do not have the concession information. We do not have the OPs. So the brokers that the consumers are working out, they're going to have to go to their agents and talk to them about that kind of stuff. But we are measuring the rental rates, and this is what it looks like. And I like to do is just take a little line and kind of see where we're going across the whole spectrum. This is kind of where we are, Johnny. What do you say on this one?
Yeah, I agree. And I'm going to back up what I said in the last slide, which is that, you know, I think we're kind of at peak rents here, Noah. I feel like as we're heading into the winter season, I think we're going to start seeing a little bit more supply. I think we're going to see those lease rates decline just as they normally do through the winter. So I think we might see rents easing off these levels here, but not necessarily falling, more about going sideways.
All right, well, nothing goes up in a straight line forever. And you could have an uptrend where we go up for 5-6 months, and then you have a little bit of a downtrend, and then it continues. You know, that kind of does happen.
Right. I think it's going to revert to, you know, typical seasonal levels or patterns, I should say.
Yeah. All right. Very, very interesting, Johnny. It looks like we're back to what? I mean, I guess late 2019, mid 2019 levels in terms of pricing, or at least approaching that level. So we kind of made up the COVID discount. All this stuff really is very, very, very helpful and useful to get some transparency on where the market is. Thank you, John Walkup, for making all of these charts. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, if you guys got questions, we got answers, please visit our forum. Other than that, we wish you to have a great weekend, and we'll catch you next time.